Welcome to the deep dive.
Good to be here.
Today, we're getting straight into what's happening or what might be happening with ISAs.
Yeah, potential changes ahead.
We're looking at insights from my pension advisor, a Financial Times piece from May 10th, and also Rachel Reeves's BBC interview just a few days ago, May 19th.
Right.
And the mission really is just to understand, where these reforms could be going and what it could mean for your money, for your savings.
Absolutely. And what's really interesting from the start is this clear signal, isn't it? That the government's looking closely at how we actually use our ISAs.
Mm.
Some initial reports, they flagged this desire to see more ISA money going into equities.
Rather than just cash.
Exactly. Instead of just sitting in cash. The idea being, to boost investment, maybe help growth.
Okay.
And we even saw some investment groups suggesting a 4,000 pound limit specifically on cash ISAs.
4,000 pounds. That's quite specific.
It is. And it comes alongside figures showing, I think it was 4.2 billion, huge inflows into cash ISAs just in March.
Wow. So that probably caught their attention.
You'd think so. It really suggests a focus on where the savings are actually parked.
Okay, so a potential 4,000 pounds cash limit. That feels like a pretty big shift. And the FT report seemed to back this up.
Yeah, the Financial Times reported the Treasury was likely kicking off an ISA review pretty soon, maybe within weeks, or possibly tied to Rachel Reeves's July Mansion House speech.
So it feels like this has momentum. It's not just, idle chat. Action could be coming.
Precisely. And then you add in that BBC interview with Reeves. That adds another layer, doesn't it?
It does. She was asked about cutting the main ISA limit, the 20,000 pounds.
Right. And her first comment was something like, very few people will be able to save 20,000 pounds.
Which statistically feels a bit up off.
Well, yeah. The figures for 2023 show nearly 1.8 million people actually did max out their ISAs.
Hmm.
That's about 17% of all subscriptions by number, but nearly half by value. So it makes you wonder about that initial comment.
Was it just a turn of phrase or focusing elsewhere? But then she did clarify.
She did. She stated pretty clearly they are certainly not going to reduce the 20,000 pound limit.
Okay, so the headline limit seems safe for now.
Looks like it. But, and this is the interesting bit, she immediately sort of pivoted.
To what?
To wanting people to get better returns, expressing concern that, a lot of money is put into cash or bonds when it could be invested in equities and earn a better return.
So linking it back to that initial idea pushing towards the stock market.
Exactly. That seems to be the underlying message. Steer people towards equities for potentially higher growth.
And that lined up with other government signals, like the spring statement.
It does. It fits that broader narrative. And what really jumped out at me was her specific mention of fixed interest.
Fixed interest within stocks and shares ISAs.
Yes. Which suggests maybe they're thinking about how people might use those stocks and shares ISAs if a cash limit comes in.
You mean putting money into things that are almost like cash?
Potentially, yeah. Like ultra short-term government bonds, gilt funds, that kind of thing. Very low-risk stuff held inside a stocks and shares wrapper.
So they might be looking to close off that route, that potential loophole.
It hints at it. If they limit cash ISAs, they might also scrutinize these quasi-cash holdings within the stocks and shares ISA to make sure the intended shift to equities actually happens.
Okay, so let's try and summarize. The big picture seems to be overall 20K limit likely stays.
Yes.
But a real governmental nudge, maybe even rules, to get more money into equities.
For those potentially better returns she mentioned.
And crucially, a close look at what's actually in your stocks and shares IS, especially if it looks a lot like cash.
Precisely. So for you listening, this really points towards a future where the government is actively, you could say, incentivizing equity investment via ISAs.
Right.
You might see those specific cash limits, maybe 4,000 pounds, maybe something else. And definitely more focus on what qualifies as an investment within the stocks and shares ISA.
So, thinking about managing your money. This means it's probably worth looking at your current ISA setup, right?
Definitely. Are you very heavily weighted towards cash right now?
Maybe because you've been cautious, or just haven't looked at it for a while.
And if so, could now be the time to think, perhaps more seriously, about whether equities should play a bigger part in your ISA strategy?
It certainly raises that question.
Which leads to, I suppose, a final thought for you to consider. With this clear government preference emerging for equity investment, what practical steps could you actually take now? To get more comfortable, more knowledgeable about investing in the stock market, perhaps within your ISA. It's definitely something worth pondering as these potential changes, seem to be gathering pace.